Incoming mail. Hello guys. Yeah, sound should be good now. Okay, thank you. Okay, the sound is good now, guys. Okay, cool. Sorry about this. Just my microphone was not plugged enough in the computer. The laptop. I had to push it a little bit further. Okay, so we talk again about gold. So gold, we do expect to continue up to the 2150 strongly. And the reason for this is this move was not a reverse of trend. This move was just profit taking. This was extended too much, too fast. Okay, the price did go too far, too short. So it needed to either range or give a correction. This was a sharp correction. Okay, it was very sharp correction. Was impulse wave in the opposite direction of the trend, but does not indicate a reverse in the trend. Okay, all what it is just because the price did travel too fast, too far, too short, in too short period of time. That's the only reason for this move. This was a profit taken. Also, it's a psychological number. It's a 2075. So there was fear that the price may notch the 2100. So they want to book some profit. I can tell you without even that the big funds who did hold gold, they didn't close all the positions at 275. They only closed partial position. So if he has, like, let's say 1000 lots, he's gonna close only 300 here, and he's gonna hold this because there is some forecast the gold is gonna go above the 2300. Okay, and that's what's gonna make them keep holding the gold to go for a higher price to take more profit. Of course, they did buy from 15 or 1600, still holding it. Okay, so there is still demand for the gold. Gold probably is going to continue to be in demand, and also we know in December the gold gets 5% raise usually. Okay, there's every year in December the gold gets like about between 4 to 5% rise in price. Okay, guys. So that's something to keep the eye on. The closer you get to December, the more confidence you're gonna get that the gold is gonna go up. So right now, this was this down wave, okay, followed by a strong recovery, then followed by a small correction. Looks like it's going to break this upside and continue going up. And this correction, very clear, this is gonna break the upside and continue going up. As long as we are above, should fix this typo, 1910. Then this uptrend should continue going up. Then the next target is not going to be only the 2075. There's going to be the 2150. So it's going to get another $75 above this one. Okay, so the next target in the gold is going to be the 2150. So gold for me is only a buy. So if I open only something like this, okay guys, so this is a gold buy. And this is a long-term buy. If you probably leave it for about 3 weeks, maybe you'll be able to get the 2150. Okay. Let's see what's happening. We discussed the New Zealand index, but there was no sound. So basically what just I said is this forecast did go really well. It did come down, and this is gonna push, of course, New Zealand dollar down, Euro New Zealand up, and of course Australia and New Zealand to be going up because Australia is holding itself, but New Zealand It's getting really weak, and that's why about 3 weeks ago or 2 weeks ago we posted one chart about pound New Zealand, if you guys do remember. This one here, and we were right here, and we said pound New Zealand is a good buy. If you guys do remember, was from here, this area. So it's about 293 pips. And the reason, and we said this is gonna break above this range. I think you guys do remember all that stuff, right? Right here, I'm gonna zoom it a little bit. Here. And this was a 750 pips move, and we said this is a trend up, wave number one, 750 pips move, and this is a correction wave right here. And we discussed the correction wave is going to indicate a continuation of uptrend, and the reason for this is this correction wave. We even discussed this before. The correction wave, when you're going up, can be very sharp to the downside, okay, like a zigzag or something, correction wave to the downside. And what does this indicate is a fear in the buyers and strong resistance from the sellers. They're trying to push the price further down, so you get a zigzag 5 waves down, okay, and this indicates there is a lot of resistance, okay. If you get something like this, okay, so there is a little bit of resistance and closing their longer positions, but it's still okay. It's indicating it's gonna go up, okay. If you get a triangle in the correction like this is equal force. So there's buyers and seller, buyer and seller, still is gonna break possibly to the upside, because triangle, when you get in from one side, you get out from the same direction to the same direction. But when you get like a flat like this, okay, like 100% flat, slowly to the upper side. So this correction was just consuming time because the previous move was too far, too short, okay. When you get a correction, like the buyers are holding, okay, but they're gaining more tops right here, they're getting higher, and the highs are getting higher. This is a big indication this second wave is gonna probably be as big as the first or even bigger, okay. So that was a good indication this wave is gonna be good. And at that time we said we're gonna go only, if this was 750 pips move, we're gonna go for 350 pips. So we target 350 pips move from the break of this entry. We got 300 so far, so 50 pips more of this one. You can close your position, or you can close now 300 pips move in this. I hope this is gonna give you understanding what's the different correction kind, okay. So we had, if you have a zigzag correction, there's a strong resistance from sellers. If you get like a triangle, it's a break, it's an even force between buyers and sellers. If you get something like double threes or triple threes is consuming too much time, something like this too much, this is undecided market, and buyers and sellers are just each one of them watching for the other one to see what's gonna happen, okay. But when you get something running flat like this, possibly 5 waves, 1, 2, 3, 4, 5, and that's it, exactly 5 waves, and bang, break to the upside. So it's very standard wave analysis, and it's going really nice. And this big second wave could be extended or could be just equal to this one. But watch out, if this correction was sideways like this, and this wave 2, you would expect wave 4 to be sharp, because for the law of alternation, according to the wave theory, is if you get the correction in wave 2 to go sideways, the correction in wave 4 need to be zigzag and need to be sharp. Okay, guys. So this will be the second correction is going to be sharp. Okay, I hope this makes sense. And this does not have to necessarily reach all the way up here. Usually wave 3 is the strongest one, but even if it's a little bit smaller than this one, or it cannot be shorter according to the wave theory. But if you get 350 pips and you catch the best out of it, then you should be happy. But anyway, what I want to say is the correction wave 2, it did consume a lot of time, was sideways. movement. The reason for this is all people will be afraid to run to sell this one because it's after a big rally, but they will not be afraid to sell this one because they will think the trend did end already. So that's why you're going to get a lot of sellers in this area, and that's going to make the trend go fast in a zigzag shape to the downside, given a correction, a sharp correction down, looks like impulse wave, where this was like corrective wave. Okay, after this you get buyers again in control and they take the trend to the upside again. If you guys want to download our AppCo trading system, you guys most welcome, available on our website, FX Market Strategy, and the annual package has a 58% discount. Okay, I hope the sound is good for all of you guys. Please let me know. Okay. So pound Australian. If you look at the pound New Zealand, it was going up. If you look at the pound Australian, it was going down, and this is explained, right? This will be explained by here. If you look at the pound index itself, is going down. What this is telling you, this is saying this price probably is going to break to the downside. Okay, this price, technical analysis purely without looking at any fundamentals. What the price is telling in the chart is I'm going down. That was an uptrend, losing momentum. Okay, that was a wave. Let's make it a little bit black so you guys can see it. That was one wave, and that's the second wave down. Third wave. Then you get a big correction. Okay. Then you get a very big, strong last wave. That's possibly a last wave in this run from here to here. After this correction, you may get a strong break out to the downside. Okay, I don't think this, don't buy the pound unless it does break to the upside. And why did we say buy pound New Zealand about 3-4 days ago, weeks ago, where we know the pound was the last wave? The reason for this was not because the pound was the New Zealand. We said that at the time the New Zealand was possibly up here. See guys, the New Zealand was at the top right here, and that's why we said buy the pound New Zealand. Okay, not because the pound is going to be really strong, but because the New Zealand is going to be really, really weak. So it was kind of a New Zealand move, not a pound move. Okay, what we discussed in the New Zealand index, and the sound was not good. About 3 weeks ago, we said that New Zealand is going to be under pressure because the bank, you can see in the daily, is giving away too much. But how far this can come down? In the daily MACD, you can see this is possibly can continue coming down a little bit more. But this risk to reward and price range, it will not be very good to buy anything against New Zealand now, because this is at the end. Yes, it can come down one more day, but this will not be very good to go and trade now. And every time, if you guys look at this, every time the price will come too far away from the cloud in the daily, it needs to come back. This was news. Anytime you see a big candle to the downside like this and bounce back, it possibly was a news or a spread. Okay, you can see it needs to come back to the cloud in the daily range, then go down. It needs to come down and go down. It needs to come down and go down. You can see this big candle was a reversal candle. You can see it start giving blue because the system is color coded, and you range a little bit before it did break to the up side. And you can see in the MACD was very clear, smooth, going back up. Okay. Also in the MACD was very clear, smooth, going back down. I will change this template. I wanted to save it, but doesn't matter. I will just put you something here, guys. You can see this was a very clear buy in this area in the MACD settings, and this was a very clear sell. And when we said buy the pound New Zealand, we were about this area because that was about 3 days ago, so about 12 days ago. And this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, that's 2 weeks. 1, 2, 3, 4, 5, that's 3 weeks. So we're just about right here when we started to break below right here, and the MACD started giving you a sell signal. Watch out for this first high. A lot of people will think the price will come down from here. No. See, we said no, we expect one wave down and one wave up. If you guys follow in the weekly forecast, you will know we said we expect this to go up with the stock market, and it did go up. When it did come here and we said there is news from the Reserve Bank of New Zealand, we expected this to come down. And that was a beautiful sell also in the MACD. Look at this. So it did come down all the way right here. Okay, so this is the first one bar in the daily chart to go down. What can happen is we can get about 3-4 more days, but this is not the best to sell anymore right now for the New Zealand. Okay, because if you look at the 4-hour time frame, you're going to see yourself really deep down. So this in the daily, you can just get an idea what possibly can happen in the bigger time frame, but don't take a signal from the daily to sell now here. Of course, this is going to be too late. The sell started in the 4-hour time frame, and you can see the divergence also right here. You can see this price was higher, but this MACD was lower, so this was coming down. So this setting was really nice, very clear, you will know. Okay, and this small up wave correction, we knew this was just a correction, so it's very clear, and that was a good advantage to take advantage of this market, something like Euro New Zealand. You want to see the Euro New Zealand index? I'll show you something really cool. Okay, guys, this is the Euro New Zealand, and you can see the same time we said buy pound New Zealand was about 3-4 weeks ago. This brown one, this brown is a Euro New Zealand. Okay, when we said buy the pound New Zealand, of course Euro New Zealand is gonna go with it. We can also put pound New Zealand, it doesn't matter here. The pound New Zealand, this black one. Okay, guys, so this is a pound New Zealand right here. You can see pound New Zealand, Euro New Zealand were very correlated to each other, and the reason for this is because the New Zealand was weak. See, guys, correlation in the markets, once you understand correlation and you would expect one index to be really weak for some reason, you will know how to trade this index. So the top one is the New Zealand index. The brown one, so I'm gonna put it here. This is New Zealand index. I'm gonna put it red because it's in red. This is how you understand the market. And the brown was Euro New Zealand. And the black was pound New Zealand. So that's the reason I made the call for the pound New Zealand about 3 weeks ago, because I did expect the New Zealand index to come down strongly, okay, and the pound to continue and the euro going to go up slowly with a weak euro. Okay, that was really nice call. At that price, you can see it's completely opposite, right? What happened if we do inverse this one? Put it, you know, here. I'm gonna make it reverse it. It's gonna go. This is pound New Zealand reverse, okay? I'm gonna make the euro the same, the euro New Zealand the same thing. You can see it's very correlated. So euro New Zealand opposite. So let's say this brown is New Zealand euro and this black is New Zealand pound. You can see they're very correlated to each other, going perfect with each other. Would you go and you buy pound New Zealand right now? Of course not. This is too late. The buy was here. We made the call about 3 weeks ago. Same for euro New Zealand. Okay, guys. So this is too late now. You should not trade this anymore. Look at the MACD is way down here. Probably this area, one more candle, and that's when you get attention for something too late. You jump in too late. You don't understand what's happening. Why is this move happening like this? If you get pound Australian, okay, I'm gonna show you something more. Pound Australian is gonna be different. So if we do put the pound New Zealand, sorry, I'm gonna look. And we're gonna make it also reverse like those ones, and we're gonna make it, let's say, the color something blue. See, guys, this is the pound Australian but inverse. So let's say Australian pound. At the time the pound New Zealand which is black, is going down. Okay, which in real chart is going up. Okay, so pound New Zealand going up, pound Australian going down. What you get from this is Australian New Zealand having a big strong up move. So if I go to Australia New Zealand, probably flying up. See right here, this flying up right here. Okay, I hope this makes sense. Okay, guys, I hope this didn't give you a headache about this correlation stuff. I hope you guys this was clear. So anyway, you get the idea. This euro New Zealand, pound New Zealand index, how they move, very correlated to each other. So the market is not random. The market is moving in a very strong scale. You just need to understand how does it move. You can see this is the New Zealand index, and we said this is the pound New Zealand, but New Zealand pound, and this black one is the euro New Zealand, but we did reverse, so it's New Zealand euro, not euro New Zealand, and you can see the correlation between them. Okay, very correlated to each other. You can see the euro New Zealand, which is brown, is more correlated to the New Zealand index in some areas, and some areas they move exactly, and this because the deviation between the euro and the pound. Okay, you can see the New Zealand right at the middle, and here the euro New Zealand was flying, but the pound New Zealand was kind of going sideways, and the reason for this is at that time the pound index was really kind of ranging to weak, but the euro was real strong. So at euro pound, at this area would have been going up strongly, euro pound. Okay, guys, that's how you understand the market. So this is the New Zealand index, this is the pound New Zealand reverse, this is the euro New Zealand reverse. At this area the euro New Zealand was flying, okay, which means going down, because this is the opposite, right? So this euro New Zealand going up, it means it was going down, because the New Zealand index was going up, so the euro New Zealand was going down, but the pound New Zealand was going ranging. Okay, so euro New Zealand in this area, the euro have been very weak against the strong pound. I think that's enough, so probably confusing some people. So the gold is rising really fast. That's what we do expect. We expect a very strong gold, guys, very strong gold. So just also you have to be trading safely, but possibly whoever have good strong analysis about the gold going up is not gonna find a price better than 1950. Also 1950 is a very strong psychological number. So 1950 is very strong psychological number. Why? I can tell you why. Because this is the last step This is the last step between 2000 and 2003. Okay. So when you trade, you say, is gold gonna break the 2000? You're not gonna say is the gold is going to break the 1975. It's very strong psychological number. Okay. So 1950 is the first last step, because when they talk gold, they talk by 50 or 75. So they will say gold reached 1950, gold reached 1975, gold reached 2000, gold reached 2050, gold reached 2075, gold reached 2150. Okay, so when they talk gold, they talk by 50 or 75. Those are the two numbers they watch. They will not even say the gold reached to 125. They will skip the 25 portion. So they go 50 or 75. Okay, so that's something to keep the eye on. This 1950 is extremely psychological number, because the human being, when we say is the gold about is the gold is gonna break the 2000, this is a very very important question in any meeting. You're gonna ask, is the gold going to break above 2000? When and how much is gonna be above? So if it's expected to break soon, then there are gonna be strong buyers. And how much, if it's gonna go fly fast, expected to go to 2300, then there's gonna be even more buyers. But if you say no, then it's gonna be sell. If you say it's gonna break above but it's gonna range, there are gonna be sellers, or they're not gonna be interested buyers. You know, that's the psychology behind this one. Okay guys, please make sure you hit the like button to support the channel. You guys know our view on the SPX. We are going up only, strong. Okay, we have been saying this forever, that we're looking at the 3500 soon. I think since we are here, we have been saying only buy, only buy. This is a no sell at all. Okay, this is the one wave, then small correction, then second wave, small correction. This wave probably need to reach 3600 for a correction also. So this is expected to go 3600. Okay. Okay guys, so this is only going up. Okay guys, if we just look at some of the trends and movement in the market. So basically, when the trade wave analysis basically the wave theory is talking about crowd psychology, is how the people behave all together. There is a pattern of psychology repeats itself, not typically, but similarly, over and over and over again. So the crowd has a psychology, it does move in pattern, a well-known pattern over time, repeated but not 100% typical, okay? It will be a little bit changed. Okay, so all of you guys know this is expected to be the first wave, okay? Then you get a correction, then you get, in this correction, the second wave, and you get the third wave, then you get a correction, okay? Then you get the fifth wave. So this is wave number 1, okay? And that's wave number 2, wave number 3, wave number 4, wave number 5, okay? Then you will be getting correction in the opposite direction, which is wave A. Then you get buyers try to take over again, but they do fail to reach this level, then they come back again. Okay, so basically here this is a trend in this area, up to here, and this is a correction of those 5 waves. The 3 waves do correct this one. So this A, B, C. So this is the wave theory, is the trend move in this pattern. Okay, this considered to be the main trend move, which is 5 impulse wave, 3, it's 5 waves, there is 3 impulse and 2 corrective. Okay, and in this one there is 3 correction waves, to the previous 5. Those 3, they do have 1 to the downside, 1 to the upside, 1 to the downside. And all this is just a small portion of a bigger picture. Okay? Why this wave analysis is kind of hard? Because it's not always easy to call this is up wave or down wave or a trend. And also this does not consider any fundamental analysis with it. It's just a purely price action. You just look at the chart and you say, okay, if the public did behave in this way, to act in this way, in this time, and take the price to this level, the next step expected from the public behavior is so and so. This is not going to take in consideration the Fed's move, you know, any accident, any war, anything happen outside in the outside environment. This is purely price action. You just look at the chart and you say what's happening right now. Okay, guys. So euro dollar we expect to come down, but from a higher price. So this wave basically is impulse wave. This red one is corrective wave, impulse wave, corrective wave, impulse wave. The impulse waves, they can be just clear impulse, 5 waves, or they can be diagonals. They can be leading diagonal or ending diagonal. This is wrong. Okay, guys. So basically what they're saying is, instead of having this wave right here going straight like this, okay, this is not, wave number 1 is not going to be just going like this. It's going to be going in 5 waves. It's going to be go like this, like this, like this, like that. All this portion is just what you see right here. So we just make it a straight line to make it easy, okay? Or they said, instead of having wave number 1 to go like this, it could be going something kind of sideways a little bit. So, and this side wave is gonna go 1 up, then 1 down, then 1 up, then 1 down, then 1 up. Okay, so that's the second scenario for this wave to look like. Okay, also wave number 5, they said you can have the same scenario like here. Okay, so it's going to be the same scenario, and this usually happens in number 5 a lot because the trend will be exhausted. Not too many buyers want to jump in, but also there's not enough sellers. So you get something like this. The trend is getting exhausted, extended in the last wave. Okay, you get something like this. It's a slowly ranging trend into the upside. Okay, so this also a possible scenario. Okay, so this wave number 5 can look something like this. Also, what they said is wave number 5, it can look something, if this is 3, if this is wave number 3, right here, wave number 5, they said it can look like something. This is correction, then up, then correction, then up. But what happened? It fails to break above 3, then down. Okay, this may not be as high as here. What the scenario right here for this one, this, if we call this number 5, so 5 failed to travel beyond 3. So this is truncated one. So when number 5 fails to travel beyond 3, so you get only a trend of, let's say, 1, 2, 3, then sideways movement, then breakout. Okay, so this is the main waves for the uptrend. You're either gonna go on 5 waves to the upside, you're either gonna go 5 waves to the upside, okay, or you're gonna go in a diagonal shape like this, or the 5th one is gonna be ending diagonal, or it's gonna be wave number 5 failed to break the high of wave number 3, and this happened after wave number 3 is really fast. It travels so fast and in very short period of time. So the big movement in the trend did happen in wave number 3, leaving no more room for number 5 to have any extension in the price to the upside, which will just consume time before it does reverse to the downside. Okay, guys, so that's just a very simple picture about how the wave theory goes. and the kind of impulse waves. Okay, the correction waves, they do have more stuff. So the correction, they have zigzag, and this indicates fast sharp correction, and number 2 they have flat. Okay, and number 3 they have triangles. Then you may have combination of zigzag plus flat plus triangle. Okay guys, usually the triangle will happen only in the last leg in the wave, in the correction wave, so it will happen in the C wave. Okay, it will happen in the C wave before the breakout to either side. Also, the triangle can happen mostly in wave number 4, and it's rare to happen in wave number 2. Triangles do indicate a balance in the force between buyers and sellers. Usually triangles are followed by explosive move in the trend, big swing. So always when you get a triangle shape, there's of course different kind of triangles. You can, then you're going to be watched breakouts. Once you get a nice breakouts, then this possibly is a really good, because one buyers or sellers, one of the two did dominate the market, and they're going to move the price very fast. Okay, so the flat is basically when the price is moving sideways. So basically the flat is the price, you're here, and the price will go up and down the same area like this, 5 times. So if this was uptrend, so the price going up like this, then this is going to break to the upside like this. And this will be A, B, C, D, E. Okay, so this will be A, B, C, D. This possibly, this will just be simple flat, will be A, B, C. Okay. So if this wave starts like this after this correction, it just gets consumed time in a very simple 3, possibly 5 waves right here. When this coming down, it can come down like this, 3 waves, go up 3 waves. When it's coming down here, can go in 3 or 5 waves like this. Then after this, we'll go to the upside. This is a simple flat. You can get extended flat if this B is a little bit to the upside here, and you can get short, running short if this C is right here. Okay, if C is above here, this will be a running short. Okay. Anyway, you get to know there is multiple kind of flats. The same thing for triangles. Basically, the triangle, you will get something like this. And the triangle, this flat is going to be only A, B, C. The triangles are going to be 5 waves. Okay, so triangle, if you're coming from here, then you're going to multiple shapes of triangle. The top and the bottom ones, they can be like this, or you can get here with the same one down. You can get expanded, which will be something like this. Okay, so the triangle will have multiple shapes also. So let's say symbol one right here, contracting like this. So, and this will be like A, B, C, D, E, then this explosive move will happen from here. So this is a triangle. This triangle can happen in here, or it can happen in here, and can happen here. Also, if you get a combination, of zigzag and flattened triangle, you can get something running really big, let's say like this. So this is a flat, then they combine it with what's called X to the upside like this, then you may get a zigzag. Let's make a different color. What is zigzag is just going to be 5 wave to the downside followed by 3. Okay, then you may get a X again. X is just a bridge to the upside or downside. Then you get a triangle right here, which is the price will start to move in a smaller like this before you get a break to the upside here. And this what they call it a combination. This is a triple three of flat plus a zigzag plus a triangle. Usually triangle do happen at the end, okay, like this. Flat usually happen first or second, and zigzag usually happen first or the second, like this, okay. Each one of those kinds usually will happen in this ABC combination here, okay. So after a big trend, usually the trend need more time. What happened here is you consuming time with no price movement. So the trend will be going up like this, then you start moving sideways. This sideways wave analysis is giving you some pattern, well-known pattern to how to actually expect them to happen, how to trade them, how to trade the breakouts, how to be aware of this uptrend or downtrend is ranging. And after each big move, the wave theory saying you need to spend more time because the price that travel too fast, too short, so you need to take more time and more time to spend, just kind of make balance in the market. It's all about balance and the crowd psychology, okay. It's about balance and crowd psychology in the market. Okay, is there any question about this, guys? So it was just a quick view about the wave analysis, how they work. How you enter right here according to the wave analysis, when you have this 3 waves like this, you get to make a bottom right here, then you start going up. Once you break this level right here, you go entry long here, and your stop loss will be below 2 right here, and this will be the entry for wave number 3. And your target, you should target the same price range right here. So if you get 100 pips here, you go for 100 pips right here, okay. And then once you finish this one, wave 3 start to reverse, and if you get Fibonacci retracement of 61.8 or 50% here, you start to get in back reverse, you enter again in this area, and this will be the entry to go for the 5th wave. Hey guys, I hope this was a quick overview of the wave analysis. Possibly lately we can focus more in some wave analysis classes. Okay guys, thank you. That was it for the day. If you guys do have any question, please leave it in the comment, and lately hopefully we can look at it. If we go back to our chart, gold is still going good so far. Okay, still in the same area. Which guys, US crude is coming down strongly now. I would not recommend to join this sell. Just leave it, let it come down all the way here, and we want to wait for the 41.30 price. Possibly you're gonna get a good entry right here. So gold, oil, wait to buy 41.30. Of course, this was a price action, okay. Gold, oil, euro dollar, do not sell it now, wait a little bit. If we take this is like an A, this is the B, this is C. So this is complete, probably start a new one. And this of course is going to be an X. Because now we pass 3. This is gonna possibly be going up like this, so possibly we can spend more time range in here. Possibly after this we may get a triangle right here. We may end up with something like this. I'm not saying this exactly what's going to happen, but we may end up with something like this. Okay, guys. So this is an ABC correction, is well-known correction. It looks like it's a bridge into another correction or to the break to the upside. If this wave does not break above here, then we're getting to have another correction, okay? So you have to watch this one. If it's coming back, possibly you may come back to a triangle, then reverse from here. So really, this is not an entry at all for the euro dollar. You probably should wait, okay? If you didn't get this buy from here, you probably do want to join this entry from this area. It's probably not good. When you're gonna get a big rally, if this happen, if it does break above here, then you may get a strong correction. I mean a strong rally to the upside. If it does break above this one, you're gonna get a lot of people who are interested to trade this breakouts right here. But also watch to not be a fake breakout. Euro dollar is really high price. I would rather to take the sales over the buys. But this is what I can see right now happening. This is a big correction. You don't want to really get involved in this one. I hope this answered the euro dollar question. You're most welcome, Mr. Sokti. Okay, you can see the dollar index is still under low pressure. If this will continue coming down, breaking up below this one, this is gonna go really deep down. It's gonna send the euro dollar up. Everything is possible in the market, so don't be taking either side very personal. Okay, we'll see what happened here. If this is gonna break the downside, it's gonna send the gold up and euro dollar up. Euro still holding ground right here. It did give a big correction, is bouncing back to the upside, benefiting from a very weak euro, a very weak dollar, I mean. Okay, guys. Okay, guys, that was the end of our forecast today. Just for this morning, you guys, this is the start of the week, so don't take anything very strong because still you have 5 days to trade. So please take it easy and safe. If you guys are interested to download our trading systems, you guys are most welcome. The systems will give you signals on what to buy and what to sell. So EuroCAD now is giving you a nice sell. So if you put EuroCAD right here, okay. Possibly if this is a wave, that's a correction, that's the second wave right here. So really what you expect here, you want to watch this area to this area right here. Okay, if you get this up wave going up to here, this possibly will offer a good sell. And possibly will be good to hear. Okay guys, so watch your cat. If you get this rise to 1 point, let's say 5780, so watch this price 1.5780. If you get a rise up to here, then a reverse, then you enter this sell with a price action here. You should target 1.55. Okay guys, and this move will be going good with fundamental, with the Canadian connected to oil and oil strength, and the euro at the end of its if it's a trending up. So I think this will work out good if we get price to rally up to here, then reject, then start going back down. You enter a sell in this area, then you target this area down here. I think this will work out good. Okay guys, so thank you. I hope we can come back later today, maybe within a London session or later in New York. Okay guys, thank you and have a wonderful day. That's about 1 hour and 10 minutes right now. It was my pleasure having you guys. Please don't forget to hit the like button, and if you do have any question, leave it in the comment section. Also, if you guys want to download our trading systems available on our website, we published in TradingView one of the US 30 analysis also, guys, if you want to check it out. Okay guys, this is our website here, FX Market Strategy. If you remember already, you already know how to get in. So once you sign in, then you get MetaTrader tools. You click on this icon right here. This is gonna open you the systems we do have. The VSA power meter, which is gonna give you a comparison between the indexes, and again, it's gonna give you all the currencies and the strengths, which one to buy, which one sell, and which one is trending with a high momentum. The advanced gravity bands, the one we use with oil. The advanced profit cloud one we use with the stock market and oil also is really a good one. It has more tolerance to range in market and fake breakouts and stuff. Advanced profit cloud ABC trading system, which we use like almost in everything. So the ABC, the APCO is more tolerant to kind of fake breakouts, a little bit ranging. It has more tolerance for this one. This one is more accurate in entry and exit. Also, we have indicators here. You can see there is a lot of free indicators. You guys are most welcome. So the currency indices, pivot point levels, the RSI bands, the chart info, which we put, like it will give you euro dollar for our time frames, the spread, and all this info on your MT4. Also, auto Fibo levels, the breakouts here. Okay, and there is also expert advisors right here, guys. So this one, there's a lot of free stuff and there's some premium ones. So you guys are most welcome to download the free ones if you want to try things out. If you want to join the premium service, you guys are also most welcome. Okay, that was the end of it today. Thank you guys and have a wonderful day. Okay, goodbye.